63% of crypto holders admit that FOMO or FUD has damaged their investment strategy. Not volatility, not bad luck, not market cycles, but emotion-driven decisions are due to either fear or hype. One dramatic tweet, a regulatory rumor, or a bullish announcement can flip the market within minutes. Behind these reactions lie two forces: FUD, which is fear, uncertainty, and doubt, and FOMO, which is fear of missing out. I'm Brett at CryptoGX, and in this video, I'll talk to you about how headlines trigger emotion, how they manipulate perception, and most importantly, how you can protect yourself from both FUD and FOMO before they wreck your strategy. We know that crypto moves fast, but the crowd really moves faster, and in a market that never sleeps, news spreads like wildfire. Something like a government ban in Asia, or even a bullish ETF rumor in the US, or a tweet from an influencer. These events don't just report the market, they move it, and they move you, the investor, as well. So let's begin with the basics. We'll start off with FUD, or fear, uncertainty, and doubt. It's a strategy that is used sometimes intentionally to shake investor confidence. A headline that says Bitcoin is banned in China may not be false, but the way that it's framed can really amplify fear. FUD creates hesitation. It causes panic selling and urges people to exit their positions not based on data but on anxiety. Most FUD comes from sources of perceived authority like governments, banks, regulatory bodies, or even major news outlets. And often the panic they trigger serves a specific purpose. In some cases, institutions might spread uncertainty using negative headlines while quietly accumulating assets at a much lower price. This really isn't a conspiracy as much as it is a tactic. If you want to buy cheaper, they're going to pretend to dump on the market and then just be accumulating in the meantime. So now what about FOMO? FOMO means the fear of missing out, and it kicks in when investors feel that they're about to miss a huge opportunity. If you see Bitcoin going up 15% in a single day and then suddenly you feel left behind, then you might want to jump into Bitcoin. You fear that you are not part of that wave, and that fear pushes you to buy high without understanding why the price rose in the first place, and you could be susceptible to a pullback if, that particular thing happens. Bullish headlines from credible news sources like Yahoo have a positive impact. Something like you can see here, like Ethereum to reach $10,000, or even here, big tech firms are investing in crypto, and then over here on this other one, new all-time highs are coming. These headlines, even when unconfirmed, usually come with a question mark, and they drive massive inflows of money from retail investors, aka people like you. The result is a temporary price surge followed by a correction, most often. You and other retail investors saw the price sprinting up, joined in the rally, but then the asset decided to kind of skid sideways due to the profit taking at the top that more seasoned investors or even institutions are taking. So you'll see here basically that both FUD and FOMO are emotion loops. They exploit instinct over analysis, headlines over fundamentals, and they impact your ability to make an educated financial decision. So based on this, how are these two elements actually moving the market? Well, there is a history of FUD and FOMO moving the market constantly. As you can see here, for example, in February of 2021, Tesla bought $1.5 billion worth of Bitcoin and planned to accept Bitcoin as payment. Bitcoin then doubled its price within months. That's the power of FOMO. Very similarly, in May of 2021, Elon Musk tweeted that Tesla would no longer accept Bitcoin due to environmental concerns, and then the price went down. This single tweet, among other factors, wiped out over $300 billion from the crypto market just in a matter of days. It wasn't a structural failure in the blockchain, it was just fear sparked by a single public statement. This is a very classic example of FUD. Now, Elon Musk kept moving the prices of meme coins and the overall crypto market, and even had to face legal lawsuits for this. Then, outside of Elon Musk, in June of 2021, China announced another crackdown on crypto mining. This wasn't new, but the way it was reported really reignited uncertainty. Panic spread, investors sold off, miners relocated, and Bitcoin dropped over 40% from its peak. Now again, that's FUD in action. Uncertainty fueled by policy noise, not fundamental flaws. Now back to FOMO. We had a couple examples of FOMO, but another one in late 2020 after PayPal announced it would allow crypto trading on its platform. Bitcoin began a very sharp rally. Because of this, and again other factors, positive sentiment swept across the crypto space and retail investors rushed in. Within months, Bitcoin crossed 60,000, but those who bought in too late, driven by headlines instead of strategy, suffered huge losses. These aren't isolated events. They follow a pattern. A dramatic headline triggers an emotional response, the market reacts sharply. quickly. Retail investors who often lacked institutional tools absorb the most damage, and this means that it's only hurting you unless you want to control it and filter out the emotional decision making. So let's kind of dive into how to actually control that emotional decision making. You first really need to recognize how these emotional triggers work. They don't just appear out of nowhere, they are carefully packaged. Flashy headlines, half-baked analysis, and social media hype aim to kind of spoil your reasoning. They create urgency and they push you to act before you can think. As an example, as we talked about in February of 2021, one tweet from Elon Musk sent Bitcoin very, very high, and then a similar tweet sent it back down. So who do you think benefited from this exactly? The goal isn't just to scare or excite you, it's really to disrupt the process, to take you out of the strategy and push you into reaction is what they're trying to do, or at least that's what you can assume that these entities are trying to do. That's where losses happen, not because you didn't understand crypto, but because you stopped trusting your plan. And as you can see here, there have actually been studies on how these particular tweets, specifically with Elon Musk, have changed the movements of the crypto market, and it is actually factual evidence. The main thing you need to know is that they are correlated. But let's take a step down and figure out how we can filter through this. Let's take it step by step. Step number one is to slow down. No matter how urgent a news piece feels, the time is your filter. Take 15 minutes or even an hour. Let the noise settle before you respond and make a decision. The market moves fast, but reckless decisions move faster, so you should let the dust settle on what these particular announcements are first and really kind of analyze what they're doing to the market and what's actually underlying the fundamentals of a particular asset or asset class. Now, step two, go to the source. If a tweet or headline seems too dramatic, trace it back. Find out what actually happened, what is confirmed, what is speculation. There's a huge difference in a post saying that Bitcoin could go to 200,000 and a similar headline with a question mark. One of them is going to be presented as information, and then the other one is going to be presented as kind of hype feeding. Now, step three, build your framework in advance. You should have a clear entry and exit point with your assets that you're going to be investing in. You should also set risk limits. Define your long-term view. When your foundation is strong, it becomes harder for external noise to shake you. No matter what happens, just trust your strategy. Now, once you've built an emotional discipline, you become undefeated. And most importantly, you stop becoming liquidity for the big whales that are exiting. And you can also use technical indicators like this altcoin season index to get a grasp of where the entire market really is when it comes to the long-term movement, and to see if we're in a long-term uptrend, a long-term downtrend, and things like this. This is just one example. There are many indicators, and I've got many other videos on the channel about particular indicators that you should look at, so definitely make sure to subscribe and check out the channel for that. So here's the bottom line. FUD and FOMO are not just market forces, they're emotional traps designed to pull you off of your regular strategy. The next time that you see a dramatic headline or a viral tweet, then just pause, verify, and lean into your plan instead of your fear. Now, if you're ready to dip your toes in safely, I put links in the description to Coinbase and crypto.com where you'll get at least $50 in crypto just for signing up with those links. And if you want to get into meme coins, I left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.